Hello, hello, hello. Welcome back, ladies and gentlemen. I hope you're having just the most fantastic day and a successful holiday season, right? We had Christmas, we had New Year's, we've been away quite a bit. We haven't seen everybody in a little while, and we're back here to reconnect with everyone on a live basis, right? So we were going live throughout December, and it was fairly successful. It wasn't a complete disaster. Making some new friends as well, and unfortunately, we didn't get the viewership that we wanted to see. So we're back to just doing the daily videos, okay? And we're going to continue a live every week, Saturday, Sunday. We don't really know this. Maybe Friday after hours. Still kind of feeling that out, and throughout the year, we'll figure something out, right? Of course, as those numbers grow, we will consider going live on a full-time basis again. However, I think a reduced schedule is appropriate as we focus a little bit more on, the social media aspect of all of this, where we're, doing the tweets and engaging, with other people online to help grow the audience, right? Because, just to sit here and do things is apparently not good enough because, if you've been here, and that's probably why you're here, is, my analysis has been pretty good since I've come on YouTube, which is impressive. I expect to be wrong sometimes, right? And, that'll come due, I'm sure, at some point in spectacular fashion. Which leads me into today's topic. Is it, maybe an entry model that we see here taking place? We're going to go through that, right? Because it definitely is. There's some things I like about it. There's some things I don't like about it. We're going to, air our grievances as well as, share our hopes. So going through that primarily today, and we're going to take a look, at some potential positions that we're interested in. Of course, already starting a small position last Friday. If you were in the Discord, oh no, don't do this to me. Not now. Not now. It's okay. I think I have a survival tactic. We're live. We're back. So if you were in the Discord, you've seen that we kind of called this out last Friday, right? Where, we wanted to wait. Things are kind of looking good. But then it just started to click that maybe this is it, right? So taking a small position, and if we can get confirmation, we'll scale up. So if you're not in the Discord, get in the Discord, and then you don't have to wait for this, because this is like a recap of that, right? So no worries. I don't think you're late to the show, right? It doesn't mean because you didn't enter on Friday that you can't enter on Monday, Tuesday, or, there's like some time here, right? So giving you clear guidance throughout that process, right? Where should your entry be? Where should your risk or stop loss be? And, to what extent should you be scaling out, right? Because it's not, if these are your common shares, they're your common shares. Obviously, I have higher hopes for my common shares than I do for short-term options, right? There's a difference between $50 on those common shares and $30 on those common shares, or 25. And the options, if we have short-term options that are expiring and, we get a boost to 25, that's very, very good, right? So, again, if you're not familiar with options, you're in the right place. We have been doing GameStop options for everybody all December long, actually way more than all December. We've been here for months at this point in the Discord specifically, giving everybody, entry models, risk management, checking in on those positions every day, giving updates on all of that, which is really good, right? So very successful so far, which is great. I do expect us to crash and burn at some point, but that's going to be in today's write-up as well, as to how to size in appropriately and manage that risk, because, we've seen the 100K YOLO, that's not us, right? I would rather play $1,000 100 times and be able to find and improve upon my true hit rate, right? Because if you just go all in and it blows up in your face because you didn't know what you're doing, because you didn't have any experience, you're done. You're toasted, right? But if you size in with 1%, just a small amount. It allows you to repeat and build upon your past experience, right? Because there are going to be times where you make a mistake. That's inevitable. That's part of the process. But if you can, fine tune everything, limit, the variables, and dial in on the controls, you can, I think, find some success with options, right? Because it does take a little bit to learn and become familiar with. Of course, we're going to be doing more of that on the channel all year long, right? You're in good hands. We've got options as a strategic investment we've been recommending to everybody. I myself am going to be going through that again, right? So it's really good information. And then obviously implementing that and practicing and building upon it, right? I'm not necessarily preaching to the choir. I'm singing alongside it, right? So again, I too hope to improve upon all of this throughout the year, and you will be here doing that every single day. So if you are interested in following along in that journey, leave a like, drop a comment, subscribe to the channel, and just kick back, relax, and enjoy today's live stream. So where do we even start? Let's talk about the entry model. Is it time to buy? That's what this is all about, isn't it? Well, it might be, but I'm also not necessarily convinced, right? So let's just go through our entry model where we have first our 15 minutes, 21, and 50 reversal, right? So we see that happen here, right? For the first time in some time, right? Reject all the way down, try to reverse, but there's no key level breakout. Try to reverse, rejected, didn't even attempt a key level breakout, right? And then try to reverse, not even close. Not even close. Tried to and rejected, no key level. And that's why we pair that reversal with a key level breakout, which we did not have here. But here we have our reversal, and now we have a key level breakout, which is the invalidation of the 200, right? Where we break through it and now base upon it. So we broke through and now we're basing upon it. So this is really, really good entry. On that note, we have the invalidation of a bearish order block here, as well as a buy side liquidity, which line up together, which is really cool. That is best shown on the 30-minute chart, okay? Where we have the order block, right? Turning into the breaker block, which is really good. And basically resistance becomes support, right? That's how a lot of these things work. So unfortunately, we are rejecting what would be key level or one of our key levels on the 30-minute, right? So where we have it on the 15-minute, and it looks really good, right? We have something similar on the 30-minute, but a little different, right? So on the 15-minute, we have our reversal signal, and then on the 30-minute, we have the invalidation of the order block, right? And the buy side liquidity. We also have a market structure shift forming, which sets up our bullish order block, right? So we could potentially retrace into this level, which would classically act as support, right? So, worst case scenario, we should, find support here and go. Our stop loss goes just below, right? So we'd like to enter as close as we can to this breaker block, right? The yellow box. But ultimately, I think anything within the purple box is pretty decent, right? And with that stop loss below our order block here. On the 30 minutes, this is great. But we do want still to reclaim the 200, this red line. Moving forward into the 1 hour, we have the same thing setting up, right? Just at a larger scale, right? So this was our order block from before on the 30-minute. And then on the 1 hour, we have that exact same phenomenon taking place here on the larger time frame, right? Where our order block is now back here through this market structure shift. and the order block's been invalidated to a breaker block. This is fantastic. This is really, really good. And the nice thing about this is our reversal signal hasn't actually set yet. So we would be early in that move as far as the long term goes if it does set and hold for the potentiality of what would most likely be a test and reject of the 200 on a longer time frame, whether it be the 1 hour, the 4 hour, the 1 day, I don't know, which was our previous hard rejection point, right? So unfortunately, until we invalidate or break through and then base upon, these are very dangerous points. However, we expect still the EMA reversal to set here based on this order block being transferred into a breaker block, right? Which would set us up for a challenge of that 200, which I get it, most likely rejects, but then we can get caught again on the EMAs, and maybe the second time we get through it, we'll have to wait and see. Aside from that, we have the 4-hour PMO, which we'll talk about in one moment. But first, we'll get to the 1 day, which is the bounce out of a retracement into the long-term support or sell-side liquidity. Very, very nice. You see how we have this here as well. That also aligns with the January or yearly OPEX open interest support at 20, which we are trending, we're trending towards, and now we're trending away from. And max pain on that week happens to be 2150. So one would expect a brief rally into that, 2145, right? We don't know how this is going to end. However, that puts us in a position to, capitalize, right? Of course, I want to be cautious of that rejection wherever it could come. So we'll get into the PMO really quickly first, and then we'll maybe take a look at the bad side of things, because you'll notice, and we'll maybe just talk about this while we're here, this bearish fair value gap hasn't been activated, right? So we've not retraced into it. So there's going to be a lot of short side players looking for the price to, rally from these lows, which is expected. This is a massive sell-off, right? And they're going to target this area with new shorts, which happens to align with our 4-hour downtrend, right? So if we go to our 4-hour chart, we'll see this clear downtrend, right? So that bearish fair value gap does align there on the 1 day, which would be kind of the danger zone. Like, is this a real rally and we invalidate that? Or was this just a brief relief rally into another walk down to support? Of course, I suspect once OPEX passes, a lot of the max pain pinning will be alleviated, at least in the short term, until open interest builds up again. Whether this be to the upside or downside, I don't really know. I would have to say my bias is bullish because we are at support, right? So one would expect, we go up, but we could go up before we go down again. So again, we're taking it day by day. However, this is a pretty decent entry model. Before we get to the PMO, well, let's do the PMO really quick. And then we'll do the RSI as well. So the 4-hour PMO has been kind of, our star of the show, right? And would you look at this? We have a reversal setting, and every time the 4-hour has reversed off a low, it's paid off that we've been watching it. If it can hold, right? This reversal, if we go to the price, here, right, led to some further consolidation, but eventually, as we got the confirmed cross, nice rally, right? And then retracement, right? And then we get caught here for the reversal, the first reversal, and then our, kind of whiplash back and forth, confirmed reversal. And this is on the 4-hour, right? So here's our first reversal into consolidation, right? Maybe brief rally, reverses bearishly, breaks down, but eventually, we even get mad whiplash here, right? So we want to be cautious with this, right? We want to be really cautious with this until it confirms, right? Once we get that 4-hour confirmation, things do look a lot better, right? Here, great. Here, great. But we want to be cautious, right, of these false sets before hand, right? Because this is our PMO with the smoothing average on it, and then we have just our moving average, and then just our PMO. So we have the first signs of a shift in momentum. Does this mean rally incoming? Not necessarily, right? So let's be aware of that. And then also, let's be aware of a potential RSI downtrend test, which we've seen last time pretty clearly. There was that brief breakout moment, which was pretty aggressive. And this was off the bottom. We had Ryan Gregg go-kart tweet, Mario Kart or whatever. And then we had the White House tweet, right? And then it was, down from there. And then we had a pretty good rally again into earnings. And then we died. So most likely a rally again into this potential downtrend and rejection. Whether we get something that happens at that point, the breakthrough, I can't guarantee. Don't control the White House account or Ryan or Greg's account. But technically speaking, maybe we get a little bit of a relief rally, but then it does look not great. Of course, things look not great before they are great, right? So just keeping an eye on it. And then I have some more things that I'd like to talk about. We're getting cat attacked here. Is the so that was kind of bad things, right? The first signs of reversal, sure, but I think we might be a little early on that. On that note, I do have another indicator I want to talk about after the CCI, which should further show this. Anyways, so we have this. Let me go to the 15-minute here. We have this 15-minute and 30-minute reversal signal setting pretty clearly still at the bottom. So I think it warrants an entry, but we just manage our risk, right? We could be wrong. This could break down. Fine. We've managed our risk, no problem. We're going to play the entry model every time it sets. More than not, it does pay off in our benefit. And on that note, because there is no catalyst, right? There's nothing really pushing the stock or the buyers other than a potential shift in momentum. It doesn't strengthen our conviction, obviously. And because of this, we may be more apt to scale out aggressively, right? Taking our 1-to-1, taking our 2-to-1, taking our 3-to-1 right away. And, it's a really good risk reward is the thing. And I expect that the risk reward paired with a retracement or relief rally into max pain on the 16th, which is just a few days away, this will be really nice. Because if we retrace to 2150, we've confirmed our 1-to-1 trade, right? At 2150, we are, almost at a 2-to-1 trade on this, and we would have locked profits, at which point our stop loss gets moved to break even, and, there's no taking money away from us at that point. And that's just it. We're going to continue to play these entry models. This is just a good example of one that's setting up now. And on that note, why I'm doing this is it's the exact same entry model we played last time. It literally it could be different. And the fact of the matter is that there's no catalyst. I think we just mentioned that, right? Last time our catalyst was a pre-earnings run-up, right? We had earnings, kind of in the front view window, and everyone was charging towards it. And that was a reason for buyers, right? A reason for the volume. And that's something that we don't have yet, other than potential day traders looking to capitalize off of, these pullbacks. So on that note, even though there's no catalyst driving it, technically speaking, it remains the same. And we had here our bearish order block test and reject, which we've now had a test and reject here, which I guess that's a liquidity grab. That's kind of crazy, but isn't this also, this is as hard of a, rejection as you could possibly have other than this. But regardless, we invalidated it, retested it almost immediately, which converts it into the breaker block, and the rest is history, right? There's our order or entry, right, off of the invalidation, and our stop loss is just below the recent low, right, which is the exact same here, just tucking it under that order block. You could even tighten it up a bit if you wanted to, right? Maybe this is pretty tight, 2044. I'm leaving it breathe. I'll play the order block because worst case scenario, it could retrace there. And we're going to do, worst case, most likely, best case as well here in a moment. So yeah, this is it of past. And we did get a 5-to-1 trade out of this, which is really, really nice. 13%, which doesn't sound like a lot and may not warrant you trading your common shares. However, if you're playing options, it added up, to 140%, I think one of the contracts went to. So just because the stock is only moving a little bit and doesn't justify you selling shares because it's not squeezed to your goal, it doesn't mean that you can't capitalize in the short-term movements, right? Because they're typically pretty easy to play. Of course, we could be wrong. That's why we manage our risk. So yeah, we've talked about our entry model, right? How it's basically the exact same thing playing out, right? Because we had a long-term retracement, then we have our EMA's reverse, right? We're pairing it with a key level breakout here, where we reclaim the 200, retested it, and then we have our order block invalidate, and then we go on a little bit of a run, right? So that is looking pretty similar here, even though it's still very much in the early phases of it. We have to watch, right? And you can begin to dollar cost average in. Don't YOLO the farm, right? And we talked about that, how we'd rather play 100 times with 1% than just once, right? So if we are wrong, it's okay. It's a paper cut, and if we are right, that's cool, because we've learned now how to do it and gain some confidence to come back and do it again, right? And then it's really just about compounding positive gains. So yeah, this looks really good, where we have our reversal signal, we have our key level breakout and reclaim. We're basing upon that for now. We're gonna have to wait and see how the week plays out with the invalidation of that order block into breaker block. So it's as good as it gets for me here on the 15 minutes. Now, of course, the 30 minutes, still looks pretty decent, but could use some work. The 1 hour, of course, looks pretty good and has some room to the upside, which kind of aligns with our goal here, right? That 2130 is pretty close to the 2150. Of course, if this does not reject, then we can look at it on the 4 hour, which has a lot of room to the upside at that point. This is still, again, very bearish in trend. The 1 month is bearish. The 6 month is still bearish. And on the 1 day, we had a hard rejection a couple times here on the 200, right? Really, really hard rejections from it. So even if we did invalidate that 4 hour downtrend, then I would expect the 200 to shut us down. So I'd like to see utilization begin to drop. I'd like to see OPEX come and go. I'd like to see some sort of catalyst to drive volume, even if it was just a pre-earnings run-up, right? But something to actually incentivize retail buyers, right? And preferably institutional buyers as well. So best case, we retrace into the 200 EMA again, trending above max pain. Because if we're retracing up to 2350, we're above 2150 max pain, right? Most likely, we retrace into this bearish fair value gap and reject there, which is just above 2150. So maybe we break max pain midweek, and then you reject down under it to close Friday or right at it, right? So that's super duper likely. And then worst case scenario, we fail to break out of the sell side liquidity, right? Rejecting our previous bearish break of structure. OPEX falls away, at which point we get pushed down further, right? Because I can't guarantee that with the passing of OPEX that there is a net relief of downwards pressure. That's very hard to say. I don't know the flow coming forward from everything. So we'll have to wait and check it out as we go, right? So we have more store closings taking place, which is great. Further improving the balance books into next year. I believe more leases are coming due, and if you're an underperforming store, you're going to get cut. Going into the week, we're watching Bitcoin, which is up slightly. We're also watching S&P 500 futures, which haven't opened up yet, but the USA did a USA, so who knows what happens to the market this week. It could be fairly volatile, but so far it looks good, right? Bitcoin seems stable. Again, we're going to watch oil. I'm sure it goes up, and we're going to watch the S&P 500 for a general market reaction, and yeah, we'll just see how it goes, right? Aside from that, we have some of our favorite characters on Superstonk being bullish, which is fine. That's great. But it gives further credence to my lack of confidence, right? I'm a little bit suspect of the current setup. So it is there, but with everything taking place and the timing, it seems suspect, right? Of course, maybe this is the catalyst people want. I know lots of people think that market down, GameStop up. Fortunately, maybe I think they both go down together and then GameStop up. So it could be a pretty volatile time. On that note, we're here for the long run regardless. Ryan's here. We're here, right? Easy peasy. Have I missed anything else? Oh, yes. We can pull up some other data here quickly because we're talking about taking entry on what, right? Well, let me show you. We use paid options data from Options Play, options for the rest of us. And it's nice. We like the data that it provides. If it'll load, we might have to use Discord. Okay, here we go. It's a Sunday, right? What do you expect? All right. Boom. So, first thing you'll notice, the 1 month trend is bearish. The 6 month trend is bearish. Relative strength is 2 out of 10. That's not something you want to see. It's really not. So, you'll notice the scores on the recommended plays. This is our bearish tab, giving us 108, 107. Nothing great. The bullish tab, even worse, right? So buying shares only 90. Just buying a call, basically throwing money away. Selling out of the money, buying at the money, a little bit better, right? Nothing great. The implied volatility is where it's been at. Currently not recommending this anymore, but we previously had opened 22 and 23 straddles for a good chunk of change, I might add. If you're in the Discord, right? That's in here, right? We recommend. That was our last play. And those are performing better by the day as we retrace into 22 and hopefully 23. Those are going to be bright green. Even anything above, I think, $20, and they're doing really, really well for themselves, and under $24.50 is the profits. You'll notice here if you were to open a new one. These would be green until 1875, and then green again until 23.28, right? So you're making money if the stock just trades sideways by selling a straddle. If you're unfamiliar, we've done a lot about it, and we can do more on the different strategies. But what I would like to talk about is that if this reversal sets, right, and things do look like they're holding, this is what we'd like to do as a recommended play, where you're buying at the money and you're selling out of the money, right? If we, where can we see this? Preview. Here we go. Perfect. So you're buying to open a 20 strike, and then you're selling to open a 24. Buying support, selling resistance, farming the premium, easy peasy. Unfortunately, the spread is pretty wide, so make sure you're getting a mid fill, right? You don't want to be getting wrecked on an instant fill. It's okay if it takes a couple hours to fill, or hopefully minutes, but it doesn't have to fill in this very moment, right? Let it sit there. If it gets filled, maybe move it up a tiny bit. But, you'd never need to get a fill on the high end, right? It's actually better if you're the seller if it's a liquid. I don't want to be too aggressive, but it's going to be hard to get out of that green if you're the buyer, right? So yeah, this is what I like as a play currently. Again, we are also managing the straddles, which we opened weeks ago at this point, just farming the theta while we wait for OPEX to pass because we had that max pain of 2150, right? Go to the all chain and then the 16th, 2150, right? So I think those 23s, those 22s were a really good place to sell. Maybe we did it a tiny bit early, but at the end of the day, it's the theta that we're really looking to capture, right? The time decay. So, we're going to keep updating everybody on our plays there. If the reversal does hold, right? If this can continue with some form of bullish momentum this week, if we get any form of catalyst, something that's going to drive volume, then maybe we'll size up. But, we're basically just taking about half of what we've gained from the straddles back into it. And then maybe we can magnify our profits on the short term. Price targets, again, it's, the buy side liquidity, which will give us our 1-to-1. You'll notice it shows on the bottom chart when I look at the top chart here. So that buy side aligns perfectly with our 1-to-1. So worst case scenario, we should still have a successful trade, right? Most likely, we're looking really good with, that 2-to-1, maybe 2-to-5. And then if things, something happens, we get a Ryan tweet, a Greg tweet, I don't know. Then, we've hit it out of the park absolutely perfectly again, right? And on that note, I've stressed this multiple times that we're going to fail eventually, right? But we are taking the appropriate steps. We have a trade plan that's based on like a principal setup. This setup doesn't change. I'm not editing things in order blocks. An order block, it invalidates when it invalidates. A reversal is when things all happen together, which I require before I look at buying, right? At which point we size in appropriately and we manage that risk with our stop loss, right? Again, that's an entry model in a trade plan. If it takes place, in our favor, great. If not, we're going to try again next time and maybe improve upon it, regardless of whether or not it performed well. So I just wanted to get everybody up to date because I don't know if you've been following the videos, but the guidance I've been giving is kind of crazy. Is this guy clairvoyant? Man, who's watching these videos, right? That's crazy. But again, I've been doing this for like 6 years now, so it's, my pleasure to share it all with you, and I hope that, you can come away from it a little bit better, if, certainly not for the worse. On that note, again, I'm not sold. I want to make that also inherently clear that I'm not necessarily sold on this being a long-term turnaround. I very much think it's just a relief rally because there's too much time until earnings. Of course, sometimes things move under the hood beforehand. You have to submit, your forms to the SEC weeks in advance for approval. And, friends have friends who talk and, they typically have enough liquidity that it's noticeable. And so you get these things where it's like, oh, wow, GameStop's really improving here. And then, X stock is really improving here. And then it comes out weeks later, that there was a filing and, there was a bullish catalyst or something, right? So eyes on. We're going to be also watching our volume, right? Our relative volume, we'd like to see that increase. We see our daily average of 6.15 and our current of 4.5. So, we get some 10 million volume days, then we can pay a little bit more attention, right? But for now, I remain super cautious. I'm quite leery, right? However, I can't just be a pessimist forever. I still have to play the technical setup, which is here. So, one of these days it will come due where it's the perfect storm, and the technicals are bullish and the timing is bullish, and it'll look a lot better, right? So, if you're new to the channel and you don't have any profits yet, and you've not been paying attention and building, some trust, maybe just watch, just pay attention, right? Give the video a like so it shows up again. Subscribe to the channel. Maybe join the community Discord so you can see those updates and you can hold me accountable, right? I'm not just 100, K YOLO and disappear kind of guy. I'm here every single day, right? Giving guidance, updating the trades as they go, and we'll continue to do so all year long. Yeah, just absolutely fantastic. Let's go through the comments here. Just some hellos. What's your impression of the data pointed out by Altimator? Which data is he talking about? Question mark. I'm not so, well, yes, my cats are here, but I'm not sold on other cats showing up, right? We already have too many, even though I'd love it. Small positions, and I'm skeptic and keeping my risk low. Yeah, perfect. We don't want to oversize, but I think the potential for a decent trade is here, right? And we're not looking for, $30, $28. My profit targets are $21. Where's $21.50, right? Anywhere here depends on when we get there, right? Like if it's tomorrow, I mean, $22.50, but if it's in a week or whatever, 21 or a little bit lower, right? So and then best case scenario, like we've absolutely nailed this trade. We have this buy side liquidity here that we could potentially challenge and reject. And maybe we get pushed through that. Ouch. It's $23.50. But that's like, oh, $23.50. Nice GameStop squeeze, hey? How are you gonna get clicks with this video? Oh, GameStop's going to $23.50. But that's why we play options, right? It's not much of a move, but it's a very good risk reward move, and why not play it, right? Just like we see some stagnation in the stock, we know that, okay, well, we can just farm some premium, take some theta, that's fine. And now we see a shift in momentum, we can kind of maybe look to plan an entry. Do you have to rush to enter this? No, right? Just watch it unfold, right? And if it holds, if it continues to look good, then you can enter, right? Like you did not have to enter this trade, originally. Let's say this is our key level breakout and it's looking really good here, right? But we did come back, right? We came back and then we reclaimed and it looked good again. We're a little bit above this time because our order block has been invalid, as you paid attention to the first half of the video. But again, it's what is this cat doing? Even if you didn't get in on it, on that first day, it was like really running. Let's say tomorrow, Monday, it gaps up in the morning and it's just like shredding all day. Even if you miss that, just wait, right? You get in on it the next day, right? And then you're still having multiple days of upward exposure, right? You don't necessarily have to jump the gun. And either way, it doesn't necessarily matter because your risk is managed as well. We're never taking total losses on our contracts. Yeah, I mean, options are, they're volatile. They're, it's not uncommon to take a negative 40% on a play, but that's a big difference between negative 40 and negative 100. Big difference, right? And typically that's not something that happens a lot, but be prepared for it, right? So scale in a small amount, and then again, you're still protecting that amount. It's not total exposure of that. More store closings. We talked about that. We talked about what we're watching. I think we went through everything that I really had to talk about. We talked about how we're managing our straddles, and even though things are looking bullish, you can be patient, right? You can be super duper patient because it does only look like the beginning, right? And there's no need to be first one on the train. You can be last one on the train and just know that the train's actually leaving the station, right? But on that note, risk reward looks good. So I guess brief relief rally into the train's not ready to leave yet. Back down one more time. We'll see how it all pans out, right? So the PMO is reversing. Let's kind of watch this going forward, right? Can we get that confirmed reversal, at which point, then we can really start to look at, maybe even before that, we can start to look at loading in, right? Because the moves, once it does set, like we've seen it set here, right? And just right after that, you get a massive run up. So we're early. There's a good chance this isn't it, but I'm still willing to manage my risk and try as a small size in, right? Not going in too deep, just, 50% is what I'm doing of my straddle profit. So, just playing basically with house money on the early set, as I think it has potential, right? For that relief rally, which we talked about. We don't have massive price targets. And then if, things do work out and this does reverse in the coming days, great. Then we get an extended run and we're a big winner again, right? But, we can't guarantee that. What we can basically guarantee is a brief relief rally, and it should be enough to take some profits. And then you can come back next time, right? So, or not, just watch, right? And we can build some rapport, and maybe then you're like, oh wow, I finally found someone who can play GameStop options. I better share them to the community. They only have 500 subscribers. Isn't that crazy? They've been literally making people money for months now. And then how long is this left in this YouTube live, right? I'm holding on to my bare life here. Close this, exit this. 42 minutes, an hour and 20 minutes left. How are you making it through this? Okay. Well, we did a complete 1 to 10 on the whole thing. I spoke for 42 minutes without stopping. Whew. I physically can't do it again. I'll die. Yeah, things look good. Let's be cautious though, right? You want to take a small entry, that's okay. Technically speaking, looks decent for a relief rally. However, I think it's early for something more substantial that kind of doesn't just reject, and it does, day after day compound until potential breaking point of, our downward momentum. So you all know the RSI, right? A relative strength indicator, which is a scale from 0 to 100, right? And the stronger something is, the closer to 100 it goes. Never breaking 100. 100 is the max it can ever be, right? So you'll see even here when it was squeezing, at the very height of it, what's that, 96, 98? So 100 is the highest it could possibly go, and 0 is the lowest it can possibly go, right? So we have something similar to that called the commodity, what is it? Cost index? I should know what that means. The consumer commodity index. I'm pretty sure it's consumer. Here, the CCI, which does not have, I don't know if I can go large on this. I don't think I can. this does not have a 1 to 100 scale. It goes from 0 as a medium to negative 400, negative 1,000. It doesn't have a maximum on it in either direction like the RSI does, right? RSI is 0 to 100. This is 0 as a median outwards, right? And that 0 on the RSI is its low point, right? So our RSI, the very lowest it could ever go is 0, right? Typically, it's between 30 and 70, right? And then 100 is as high as it can possibly go, right? And then the CCI still is a, like a momentum or a strength-based indicator, and it's just going to show you a little bit more, right? If you're looking for those extreme movements, and just something that I've been paying attention to, I guess, that I wanted to share. And so what I was looking at is, we're kind of in that value zone, right? And it's really where we transfer out of that. You see where the green line stops, it's like the water level, right? It's where we break free of that water level and go into the, that sky level or air bubble level, if you will. So it's really this area of transfer where it crosses the median 0, right? Where you're going from negative 100 through 0 to positive 100, right? This is the golden zone, right? So we want to be entering our long trades at the break of the water line, right? We have the break of the water line here. Brief rally up, right? So you would have went from, let's say, 23.50 all the way up to 24.50. Now, I know that's not a lot, but this is kind of what we expect to happen, just a brief relief rally between earnings. I don't want to be that guy, but well, that's what we had, right? We had earnings, and then we bled down until a mid-rally, and then we bled back down into our pre-earnings run-up. And that gap down, and then, here we are again. So, just I think this gives further credence to it being a little early yet, because we're not breaking up from, kind of that water line, if you will, at the 100 mark or negative 100. And then this is going to be that time where we're entering when it does, and then holding throughout and then trying to scale out up here, right? So just because we're coming back doesn't mean it's the end of it. It doesn't mean you have to rush into an entry because there is no catalyst. However, we've done pretty well for ourselves the last little bit, so looking to give some of that back based solely upon the risk reward. It's so good, right? The support is right below us, and our resistance, it's up there quite a bit. Even if we are, taking those lower resistance that I'm forecasting, right? Those short-term resistance, these might be a little bit more long-term. Does that mean, this isn't it and it's never going to happen? No, but, we have to take it as it comes. It also doesn't mean that this isn't it and won't happen, because it as well very much could result in, buy volume and Lord knows what else, right? So taking it day by day, looking forward to the future. I think we're close. I'm not necessarily sold on the entry. That's why I'm, voicing my reservations about it. But it looks good, right? Like, it doesn't look bad. It's definitely there. I think it's good enough to take and scale out along the way. However, it's a lot of people get people so excited, right? They're like, "Oh, this happened, and now it must mean that it's finally time," right? But I would rather have 100 entries that pay off 75 times or 60 times, even 55 times, then take one entry that gets obliterated, right? or one entry that wins and still not know how to repeat the process successfully, and then on the second entry you blow it up, right? So I do think that managing your risk and repeating the process is healthy. Taking it day by day, very much so, right? As we rally into 21, 22, we may look at closing our straddles early. But again, we should be safe to hold those to expiry as far as I'm concerned. And the closer we get to expiry, the easier they will be to close out. However, if you do get profits you're comfortable with, by all means take it. We're not in the area of danger by any means. We don't need to close them out. They should continue to print, even though they're fairly cheap, right? So nothing too exciting. Excited for the week, I guess, right? Let's check out what stupid stonk. I mean super stonk. Just kidding. I have fun. I mean, this is where I hang out. That's how I know. Yeah. And then you all got a present and said no thanks. I do like this though. This is good. This is oof, America, right? What are you guys doing? I have no idea. I'm just watching. Oh, the Ultimator. Someone asked us about this. Spikes before big runs. And we just had a spike is what they're saying. We had a spike here before big run. The run had already kind of started though. I just want to say that. Well, there's not a big run here. Small run here maybe. New lows though after. No run here. No run here. Maybe a little relief rally here into new lows. The run was already happening during these spikes. This was at the peak of the run, this spike. And this spike had downwards trending. That totally invalidates it. This is too zoomed out to tell anything. And then this massive spike does prelude the original squeeze, sure. But obviously this is not this. I don't know how to say more than that. Price movement not imminent. Likely, but not like, oh man. That's what I mean. Like, it's so people see this and they expect, like, what do you see this and what do you think, right? And then there's this, right? Oh, Kitty goes all in, wild card, great. They're just pushing biases, and it's not healthy. Well, it's just where the bulk of it was, and all of these contracts are like absolutely worthless right now. They were bought so long ago that even if they finish in the money, which they're not, they've been held for so long that they've decayed so aggressive. Like, you paid such a premium to just like, ouch. The options chain is so cooked. Like, buyers are not in control. But I think because of that, relief rally, right? Because we've been pushed down a little bit. Just needed a few shares. I mean, 3.5 million shares, is that really a lot? Probably not. It's like a 400 million float stock. I'm not sure 3 million shares matters. So again, random data point, trying to be bullish about it. Honestly, And then people crowd around it. They're like, oh man, this makes so much sense to me. Right? Even giving you a date. Boom. Man, now that's funny. Right? Like he's aware they would likely upvote the hell out of it. You mean like that? 2.5 thousand? Holy shit. That's aggressive. Oh, here's another one. So, the lady doth protest too much, methinks. I don't know. Could be wrong. Just suspect. Quality content here. Yeah. That's all I have. I don't think we need the second hour, do we? Is there any questions? Does anyone have any questions? Let's kill a Q&A quickly about GameStop. Anything that we've covered today or maybe have missed, and let's call it there. I like that. And then people can watch the stream, and it's short, it's concise. We hit everything we wanted to talk about, and we can go into next week swinging. Cool. Looks good. Not super high conviction on the trade. So if you wanted to sit out and just watch, that's fine. Maybe a good opportunity to paper trade alongside us for the year, right? Maybe that's something you could all do to help build the trust and rapport, and also work on your own execution, because that's very important, right? It's not just the technicals. It's, getting filled appropriately on the mid, not taking bad fills, right? And then, both on your entry and exit, right? And then everybody gets greedy, right? They get a good entry and then they hold position, it goes green, and they're like, I'm going to be rich, right? They don't have these short-term price targets to scale out in along the way, or they start to see past them, they get tunnel vision, and then, they get absolutely roasted. These are all things that you'll need to iron out, right? You need some practice, gain control of your emotional state while trading, and it takes some time, right? So if you're just locked onto your common shares, but you're interested in options, it's a good opportunity to progress in that, right? Very much so. And doesn't look like we have any other questions, right? Of course, if you do, I'm in the Discord, right? If you're watching the replay here and you're like, oh man, I missed the live, how am I ever going to answer or get my question answered? That's okay. Just join the Discord and we'll get you. Hello, Good Game Linktree, and you can jump in and we'll have a little conversation there, right? So I am back. I'm here all week. We're going to be making those daily recap videos, and I'll be back next weekend sometime. We'll kind of probably announce it early so you can mark it in your schedule. And yeah, if I've missed anything, please don't hesitate. If I can improve upon this in any way, again, all ears. And very excited. We just had the new year. Looking forward to what 2026 has to offer. I will continue doing my day trades, right? I will continue doing the GameStop commentary, technical analysis, and options education, right? And, hopefully this compounds successfully. We can build up the community. we're trying to get 1,000 subscribers right now. So if you haven't, subscribe to the channel, tell a friend. And once we do, then we can maybe try to increase the live schedule, right? Obviously, we want to make sure that it is time appropriately spent, right? Because I have to be hitting the social media and be advertising the stream and all of that. It's like a lot of work, which is hard to do when you're speaking continuously for hours and hours at a time, which I love to do, right? I love to talk about GameStop. But we need to make sure that we're getting all of the pieces of the puzzle in the right place. So with that being said, thank you all so much. Have a magical day. And this is the wrong channel. That's for my magic channel. We need something for GameStop too, right? I don't even know. Have a fantastic day. As long as it's good, right? Take care of yourselves, your loved ones, and I'll see you all throughout the week. Take care.